This whole thing came about because let's just be honest about it. When things started turning in 2022, it wasn't really clear to me because I had stopped trading. I wasn't really an active trader in late 21 and 22. So I really didn't know where we were in the cycle in the way that I would have known back in 2018, 2019. And I didn't realize that the cycle had already turned bear by the time we got a whole bunch of people joining our community. In December of 2021, the bear market had already started, and it was deep actually into the bear market, and I didn't even know that. And caused us to make a couple of decisions that in hindsight, if we could, we'd probably go back and remake them. But more importantly, what happened was our infrastructure got exposed as not being quite what it ought to be, right? So the contracting broke down. We ended up having some challenges. And then ultimately, what looked like a product launch turned out to be a fake product launch. It didn't work. We really could not bring this thing to market in 2022. And that was a really big turning point, and probably one of the things that you really ought to look back on in hindsight and say, geez, that's the thing that really has probably hurt us the most. Because had we actually been able to launch the product back then, we'd have a lot more on the way of, customer storage. We'd be further along in terms of, everybody looking in and saying, well, what's the progress and so forth. It turned out it was more than a year later before we could really legitimately stamp the product as shipped. Looking back in hindsight, it just would have been a much better situation for us. It caused us to have to do all kinds of things. It caused a lot of frustration and anger and hurt with people that really, if they had taken a look and understood what was going on and really tried to grok it, I don't think they would have acted the way they did. But people are people, and everybody's in this thing for whatever reason they're in it for. And it caused some significant, sort of microstorms within inside the project. And then, of course, 2023 really drug out, and the finances got very, very difficult for us. The bear market at that point was the killer part of the bear market that kills most projects that don't have significant funding behind them. We tried to get funding all through that period, and really it was very difficult, but we survived, and we did get the product out the door. Now we're in this fall to winter beginning of 2023, and the markets are now starting to tip back up on the cycle. The Bitcoin halving is upcoming, an ETF is almost guaranteed. Literally everything is shaping up. We got an election year coming up, so they're not going to let the economy go in the tank, at least over the next 12 to 14 months. So, everything is really shaping up for this next year to be in great shape. So I don't know, it might turn out to be fine, and even maybe a benefit if you really want to look at it from that standpoint. But I just really mostly look at it as, they turned on the money faucets in 2020. Everybody had a lot of extra money. They could throw at all kinds of different things. The money faucet's really been turned off over the last 2 years. There's just not a lot of free flowing cash coming into the economy. And so, everybody is tightening up, even though the economy, if you look at all of the things that suggest that we're actually in a pretty good economy, all around, I don't think you can find too many people that would actually say that. The point I'm making is that we had to figure out a creative way to actually fundraise if we weren't going to be able to get it in traditional venues, traditional avenues, and so forth. And we've always had this on the roadmap to actually move SPFs over first into a different kind of a format so that we could get them listed. The key problem to moving SPFs anywhere has always been the legal environment. And, for the last 2 or 3 years, the SEC has been on fire in trying to go after, crypto projects in general, and certainly after anything that they see that's, not above board. Essentially what happened for us was when Ripple finally got to some adjudication of their situation in court, part of the ruling is that the judge, came out and said in the ruling that tokens that were sold by the Ripple Corporation into exchanges, just generalized selling, they judged that those kinds of sales didn't qualify as investment contracts, because why would they? You're buying them, even if you happen to know that some of the tokens you're buying are coming from the corporation, there's no, agreement between you. You're buying them on the exchange. You hope they're going to go up, but the company's not going to, make a promise out of that sale. So that caused us to say, look, we're going to have to change the roadmap around. We're going to pull this stuff forward. Everything else comes to a complete stop. And that's what we're going to focus on. And so for the last month, that's what we've been doing internally. We've been working through this process of determining how do we get these things onto an exchange. Well, they won't go on a checks, right? You can't put them on a standard centralized exchange, because those people are afraid to death right now of the SEC, because they are the ones that the SEC's primarily going after. So in DeFi summer, which was, I think, 2021, if I remember correctly, I didn't participate, so I don't really know. But what they called DeFi summer, the whole decentralized finance exchange thing kind of started and took off. And if you remember back to then, it was all about farming potatoes and all sorts of, stuff along those lines. But what they were talking about was generating yield off of the people that want to support these things, essentially being the market makers and the underlying liquidity infrastructures. It's going where it should go, to the people that are supporting, the industry. And so that became a thing where people made a lot of money, providing liquidity and so forth, but it was still a little rough around the edges. Ethereum had and still has a ton of problems. So there were a lot of things you really had to route around in order to do it, successfully. But in a crypto bull market, all those problems get papered over. It doesn't matter if a transaction costs $250 because you're going to make, $10,000, right? So there was a lot of that. And there's still some of that. Right now, there's a bit of that going on, because these blockchains that are from the old days haven't really figured the answers out correctly to do the stuff that they need to do. Now, look, Ethereum specifically has an update today that they put out, that they are about to push out this new version to testnet, which everybody's been waiting for. They were hoping to get it out this year, so that's great. And if this ultimately goes through and does a good job, it's potentially possible that Ethereum cleans up some of this fee structure stuff and scalability issues into 2024. But we couldn't wait for that, for one, and more importantly, I'm not totally convinced yet, as we looked into the tech. And there's a couple of other reasons, just from political basis, stuff like we'd be one out of, 80,000 projects and all this sort of other sort of stuff. But in the end, that's kind of the deal. So then what are people doing over on the Ethereum side? Well, they're moving to these L2s. So a layer 2 is essentially a way of taking transactions and pushing them up into a different, off-chain or side-chain technology. And these side chains then do this process of rolling up the transactions into discrete units and then sending them back to the base layer blockchain Ethereum, right? And it's a good idea. It's not, it's certainly not an idea that, we haven't been familiar with for years, but there's a lot of issues there. First of all, you have to end up now trusting, the coding behind multiple different entities and organizations. Then you have to choose which layer 2 and figure out how it's going to work. And so then there's going to be all these lattice work of bridges and sending back and forth. We started looking at the other options, and the other options are interesting because there's a couple of really good options out there right now. Back in the day, we actually had a couple of people that were suggesting we go with Algorand or we go with, one of these other layer 1 solutions that are out there. But, from my perspective, I just never saw them really catch fire the way that they should, if they're going to end up being the global world computer, right? So we never made that decision back then. It would have caused us to throw everything out and start over. And today, they don't really factor in even still. Today, the choices tend to be Avalanche, Solana, And, there's maybe one or two others out there that deserve, serious consideration. I'm not saying some of these other layer ones can't work and can't ultimately service. They probably will. And there will probably be good, use cases for them. And then, likely what'll end up happening over time is that there will be so much bridging activity that it really doesn't matter what layer one you're on. But that doesn't really matter because at the end of it, we are in a situation where the core blockchain running underneath all of our stuff is not now and has never been actually secure. When we left Saya, I wrote this article, I'm pretty proud of it. It was one of the few things that I ever saw from the time I got involved in crypto that united everybody in a community. Literally everybody over on Saya was behind this idea. And the idea is to preserve and ROI these, China ASICs that came in, as well as to then provide the ability for the nebulous made ASICs to ROI and then to all live together in harmony and, go forward. And, they shot that down. The founders over there shot that down. And, once we saw that, that was what gave us permission to do this. You know, in hindsight, looking back on it, I should have understood what was coming, but I'm naive and I didn't. I thought people, would see the benefit of, building and growth and positivity and, so forth. But in crypto, there's a heck of a lot of the opposite of that. So what ended up happening is we spent 2 years, under the thumb of those people, essentially doing everything they potentially could in order to extinguish us as a project and to ensure we never got hash rate, to ensure we never got, we had a handshake deal with F2 Pool to come aboard, biggest pool at the time. And they were ready to go. I was going to send them some tokens as a gift. They were, ready to do it. And then just at the last minute, it just went poof, and they would not explain to me why it went poof. We never got more than a couple of petahash of hash rate. And, when there is 88 petahash of S11s, in the world, and we only have 2 petahash available, it isn't going to take much for somebody to attack the coin if coin price goes up. And we saw that, in late 21 when the coin price did go up, that more hash rate just flew right into the ecosystem. We went from 1, well, actually in the summer of 21, we had got down to under 1 petahash, and it went all the way up to 20, right? By the time we were, into January of 22. So for somebody to 51 us was, trivial. I mean, so if there was a lot of money, if the coin had stayed at a high price and there was a bunch of, exchange activity and, we got into some significant storage even that early, we would have been 51 by now. The only reason we haven't is because there just has never been that much value here to accrue yet. And yet, what's happened now is we've built out a data center that is significantly valuable, right? There's a lot of capacity here. We're slowly working through making it more durable by watching the people that aren't quite as committed walk away. And that's leaving the gold at the bottom of the pan, which is all of you guys, the providers who are essentially driving, true security and durability on the network. But over on the ASIC side of the house, we've watched Saya zoom up to 35 petahash of hash rate while we've actually trended down to where we're now back, below 600 terahash, whatever. I mean, literally one person could buy enough ASICs to put in their garage and essentially do an attack on our blockchain and essentially compromise our deal. They wouldn't win anything, right? That's the whole thing. First of all, there's not enough money to win, right? So that's the thing. So it'd be a nuisance, attack. Second of all, we've had to put onto these exchanges serious numbers of confirmations. So whenever you want to send coins over, it takes forever for them to confirm. Because we, know that one morning we could wake up and, all of a sudden, oh, hey, we're under attack. And it's not that we would lose a lot of money or the storage is, at risk yet because there just isn't a lot of customer storage there yet. It's more that it's just a big, giant reputational hit that would probably cause us some problems going forward. It could still happen. I mean, and if it does, we'll deal with it and address it just the same way we've done everything else. But at the end of the day, it's one of those things that does keep me awake at night. And this is one of the beginning ideas that we need to look at in terms of the future. So that's been on the roadmap to, look at another layer one for our entire project, for the contracts, for the network, for everything that we're doing, not just a single token, but for the whole enchilada. The problem is that, it's going to involve throwing out virtually everything and starting over. What drove this decision ultimately was, well, what's going to be the right thing to do as we continue to go forward? So we start with SPFs, then we do maybe an interim step where we move over half the SCP supply, and then maybe we do the next step, which is migrating the entire chain. So we chose Solana for this first, SPF move over because of a number of things. First of all, it's built to be scalable. It's built to be performant from the base chain layer. Now, they haven't yet, had to weather the kinds of volume and transactional, capabilities that Ethereum has. So, it could buckle. And over the last couple of years, they have buckled significant numbers of times. So it's not suggesting that they have some kind of a perfect environment, but they do have superior tech based on the comparisons today if you go backwards. This whole atomic composability that's over there really allows for some excellent sort of stuff between exchanges and aggregators and the ability to sort of have things talk to each other. They've got a lot of unique ideas having to do with like NFTs that can be really helpful for us. The deal there is the NFTs that we're talking about on Solana are actually being used by the Helium project as, little unique wrappers for addressability to each of their storage or their nodes that are out there on their network. And so there's a lot of value to that. And we're probably going to use them internally with you guys when we start migrating the SPFs. I'll talk about that in a couple of minutes. To get this thing going, what we did was we said, well, all right, how do we get the coins and tokens over to that side, to the outside? Well, the first thing that you look at is you look at a bridge, and building a bridge, you have to, figure out if you're going to do decentralized or you're going to do centralized, but it's a lot of work. So the next step that people go, or what they chose to do instead over the past to do things like Bitcoin bridging, is they wrap tokens and they take them onto a custodial bridge, right? And what a custodial bridge is that you send your tokens into this environment, this wallet, this, place, and then somebody on the back end has the keys and holds all that, in custody. And then ultimately what happens is new tokens get minted that are, stamped with like a W or whatever on the other side. And then those go out and they can trade and do whatever. And they're surrogates, right? They're surrogate tokens for the actual underlying asset. And so then when you're done with the surrogate token, when you want to go back to the underlying asset, you send them back to the bridge, they burn the token, and then ultimately you get your original Bitcoin back. So we could have done that, right? But the problem is that there's some real challenges in being the custodian. First of all, the SEC is going to want to have, a pretty good understanding of what you're trying to do there. And it's not going to work, right? They're not going to accept it. Second of all, being a custodian means you hold all this money from people. And it's like, we certainly didn't want that. So, doing a custodial bridge didn't make any sense. And then, we just said, look, we're going to migrate this whole thing anyway. We're going off this blockchain when it's all said and done at some point in the future. So why not just start now? And then that way, when we get over there, even if we end up on the wrong chain, we will at least be on a virtual machine environment with, more compatibility, and then we can bridge from there to wherever we need to go. So let's just go ahead and create a one-way transporter. So the transporter is this idea of we are going to, transport up these tokens. They will go through this device where your original SPFs get burned immediately, and then they rematerialize on the planet as SPF, whatever the, declinator we are going to apply to them. The deal is that they will go across this transporter and, materialize down into the ecosystem that we're looking at, which is, in this case, the Solana environment. So then what happens at that point is, for one, there's a supply thing. So when you start looking at these projects that are, coming new over on Solana or over on any of these things, and they get new listings and so forth, usually the coins have not been, mined yet, right? They're not totally done. So what ends up happening is they set an emission schedule, the project takes whatever, they earmark money for VCs, they do whatever, and their pie chart gets made up and then they do that. Well, in our case, it's different because the entire emission is already done. It's there. So what we have to do is we have to avoid a couple of things that are, potential challenges. First of all, we can't get over there and not have enough tokens for liquidity, right? There has to be enough to meet whatever the demand is. Quite potentially possible that we don't need that many over for liquidity. But you never know. Something big could happen over there. We could get the right person to show up and, say the right thing. And next thing we know, we need to have more. So what we'll have to do is we'll have to set it up so that we can send over what we're calling an initial tranche. The initial tranche we'll talk about in more length, but is actually made up from multiple components, but the project will send over a bunch of tokens. There will be some stakeholders that will send over some tokens, and that there will be some additional tokens that will get sent over, which I'll describe in depth. But what will then happen is once we get an orderly market set up over on Orca or Radium, whichever exchange we decide to start out on, after that, we will then move to the next step of turning on what we're calling an emission schedule. Transporter has this mechanism built into it that you go ahead and send to it. And if there's not enough space in it this month or this week or this day or whatever, the transporter will tell you back, sorry, you're not able to send those right now. Do you want to go into a queue or, just send them back to your wallet or whatever. If it can accept your tokens, it'll take them, it'll immediately burn them, and then it'll materialize them over on the other side. We don't know yet if the emission schedule is, 30 days or 60 days or, 90 days after we do the initial tranche, but it'll be some short period after. And then that emission schedule could run, multiple years if we stayed on this blockchain. And there is, by the way, one potential way we could stay on our blockchain. I'm not going to get into it today because it doesn't matter. We'll talk about it in later roadmap calls and stuff. We're going to have to build smart contracting over there. Now, there are some very generic smart contracts on the Solana blockchain that everybody uses. And then for the things that we're going to need to do that are a little interesting, we may have to do it a mix where the transporter does some of it, like minting the new tokens, and then the smart contract is developed along the way to do some of the other things. And one of the other things that the smart contract might do, for instance, is to help provide the SCP claims. Because as I've said in our post today, what's going to happen is as the first, coins go over in the first 1 to 6 months, whatever it ends up being, they will no longer collect the SCP claims on that chain. But this is where we can perhaps use NFTs to our advantage or some other mechanism, because what we'll probably try and do is at least track the tokens. And if we can track them, then it's quite likely we can do something to recompense those SCPs for that 6 months. The thing is it's not that many coins, right? The network isn't full enough yet to where the SPFs are shedding off a lot of SCP. SCP yields are not why people are going to come initially in 2024 to stake, SPFs in the exchanges. They might, know about them and say, look, I'm going to buy a bunch of them in 2024 because they're dirt cheap, and then sack them away because I know when this thing gets up to an exabyte of, used storage, then these things are going to be throwing off a ton of value. So, if they do that, that's on them. We're not saying one way or the other what the price is going to be in the future. All we're saying is that when there's more storage on the network, the rules of the network are that 30% of the overall contracting between a renter and a host gets thrown off into these SPFs and divided equally amongst the 400 million tokens. If you understand that mechanism, you'll have to draw your own conclusions, what you think will happen, in the future. So yeah, the claims won't come along right away, but we should be able to roll out an update within a couple, 3, 5, 6 months, whatever it takes. And then the claims will show up. And if we can recompense, we will. And 50% of the supply was minted and put into a treasury and will ultimately get locked down and not transported over, because those tokens are for us when people start ultimately accepting this notion of Web3. The stuff that is of real consequence is real business data. And real business data is not going to buy coins and put them into contracts, not going to live without SLAs, not going to live without support, not going to live without any of that sort of stuff. They don't even want to know about crypto underneath it. So essentially, when we get to that point, maybe it's 2024, but I'm guessing it's going to be a little further out. But when we do get to the point where we start rolling out Conductor, that's our contractor, into individual relayers, the relayer is the renter, right? When that all ends up happening, where we do roll out Conductor into individual relayers, that people will be able to buy the token themselves and go ahead and seed the storage that they want to do. We don't make any money there, right? At that point, we get cut out of the loop. We're not even in the loop anymore. So there has to be a way for us to actually generate revenue on customers that we generate in that regard for the development that we've done, the network we've built, all the stuff that we continue to do in development. And the way that we do that is we pull our share, that 200 million token SPFs, come back to the project, and that will happen forever, or, as long as, we're continuing to work in this sort of fashion. So that's what that's all about. So really what you end up with is there's really only 200 million tokens in the supply. There's a total supply, which is 400 million. And then let's call the circulating supply 200 million. And it's quite likely what we're going to do is time lock those 200 million coins so that people in crypto, can be assured that we're not just going to turn them over to the exchange and dump them at some point. Once we time lock them away, then the circulating supply, 200 million, should show up on places like CoinMarketCap and CoinGecko and so forth. Out of that 200 million, the project owns about half of that. But those are the tokens that we are using to incentivize the network development, to grow the network, and to get partners really selling storage and to really do all of that sort of stuff. And then the other half of that is owned by the original OG stakeholders. All right, so let's talk a little bit about the DEXs and how this works. So I talked about it in the post a little bit. What happens in a decentralized exchange is, well, let's talk about what happens in a centralized exchange. What happens in a centralized exchange is you send your tokens in, okay? They put them into a wallet, hot or cold, whatever they do. We've seen over the years the security issues there. Once they have put them into their deal, they also enter them into a database, right? And the database is actually the exchange, not the wallets, right? All that happens is when you trade with somebody else on an exchange, they just make a database entry. Oh, this address traded over here, to this address or whatever. Then, they mark the ledger up. And then at the end of the day, when it comes time for a withdrawal, is when the actual thing gets committed to some blockchain somewhere. Otherwise, it's just all numbers being traded back and forth in-house. And that gives them a lot of power, and it makes it so that exchange operators understand, hey, look at this. We've got all of this crypto and nobody really cares, or knows. It's just all sitting here like a bank. And hey, what do banks do when they have a whole bunch of money like this? Well, in crypto, what happened is a whole bunch of these guys went out and gambled it on BitMEX, right? So that's been a real big problem with checks. And, a lot of the centralized exchanges over the last 2 years have had this sort of come to Jesus moment where they've had to account for some of this stuff. And of course, that's what caused a lot of the stuff to sort of fail in 2022. So that happens on a checks, it's all, handled by somebody. On a DEX, it's completely different. What happens is you're swapping, tokens direct with another human. And to do that, it all happens atomically on chain. And so there has to be a process for that to happen, that can be worked out so that cryptographically, tokens don't get transferred until funds are made available on both sides. And then there has to be sort of a underlying architecture to make sure that there's actual liquidity there, that the tokens you want to buy and sell actually exist in the world you're trying to buy and sell them in. And so that's what this whole DEX infrastructure. So now this year, DEXs are really well drawn up. They work well. They're been iterated on multiple times. The new ones are coming out. And this is an area where Solana, again, is better than a lot of the other places that you go to. The UXs are just superior. They really are easy to use. They're very familiar. There's not a lot of weirdness there that you found if you were trying to learn how MetaMask works and adding contracts and tokens. The UX on Solana is very good. Makes it very easy, makes it very well. And that's near and dear to our hearts, by the way, because the UX on the relayer and what the UX will look like on the Examiner coming up and what the UX on the console is all about delivering a user-friendly experience. And I think that's something that's really important to this thing that crypto's never really put the kind of time and energy into, and the people that want to exploit take full advantage of it. So anyway, over on the Solana side, you have these DEXs that are all, ready, working really well. And you have this ability to put this underlying liquidity into a token. So if people are just swapping with each other and there's no, centralized entity, well then, shouldn't the people that are providing the liquidity get some money for putting money up? In other words, it's like if you put money into a CD or if you put it somewhere where you expect it to earn interest over time, because it's, capital, then that's the situation. And that's exactly what happens under decentralized exchanges. They're called liquidity pools. And, you put money into these liquidity pools, equal amounts of both sides of the trade. And then ultimately what ends up happening is you are participating in something called automated market making. In other words, somebody wants to buy SPFs and sell USDC to do that. In other words, give USDC for SPF. So there has to be both of those coins in on the trade. And then ultimately, once the trade gets made, then a fee gets pulled out, like in all markets, right? And then that fee gets put into a pool. And after a period of time, all of the fees that are collected are then divvied up and split proportionally amongst the amounts of money that people have put in to create that liquidity pool. So the words you keep hearing are TVL, which is total value locked. And so what that's about is what you want to see is you want to see a high total value locked into any coin pair, because that means that you can put a lot of money into it. You can buy a lot of tokens. You can sell a lot of tokens. That attracts whales. That attracts institutional players. That attracts people that just literally have no way to participate on our current SCP chain, for instance. You could never get institutional buy-in right now for SCP, ever. There just doesn't exist any way to do it. So how does the yield work? And, is it like you get like 1% every year? Is it like 5%? No, they're really high. The yields are very large because you need these large yields because people are actually committing significant, serious assets. So the thing is that when somebody comes along with a project, if it's a well-known, project that has a lot of heat underneath it, there's a pretty good chance that, they can set the yield, towards the low end and still attract plenty of value. Or if a VC's behind it and putting a lot of that energy behind it. If it's a project like ours where a lot of people are not going to have heard of it before, we're probably going to have to raise the yield number. It's probably going to have to be a little higher. And people are going to have to look at it and say, holy cow, you can make a lot of money by putting your SPFs into this, as long as you back it up with the other side, which is probably going to be USDC first. Maybe we'll do one or two pairs, but we'll see. But the deal is that the yields are going to end up being fantastic. You're going to look at it and say, I can make good money just by holding these SPFs. And it's money I can make today. I don't have to wait for the SCPs from the storage that shows up. So, that'll be a thing that you will want to do. And we hope we'll get a good high total value locked right out of the gate and move forward. But the other thing that we're going to do is do some enticement, which is we'll have an airdrop that will happen where we will look at, and probably again, this will be based on an NFT, where, the individual SPFs that are sent over to the other side and then locked up for TVL will ultimately qualify over some discrete periods of time, 3, 6, 12 months. And then they'll hit those numbers, and then airdrops will happen where tokens will automatically rain down into their wallets, and they will be, doublings, and, significant amounts of the token will show up free. So that's where you get a lot of people that are farming these coins right now, because they're farming in advance, waiting for the big dispersal to come from an airdrop. So that will end up happening here. And then, of course, the SCP yield will begin to, increase and go forward. So there is some stuff you need to look at called impermanent loss, which is essentially opportunity cost, what you could have made if you didn't provide, but that's made up by the yields and the airdrops and the SCPs, and then ultimately you're going to do better than what you would have done by just holding the token. All right, last thing is just wallets. Essentially, there are wallets on Solana. Phantom is a really good one. There's a couple of really nice wallets over there. UXs work really well. Those are the wallets that you will use. We expect that we're going to tweak the wallet internally so that you will be able to see what you own out there. But essentially, when you go to do anything, it's going to take you to your Solana wallet, because that's where you actually move tokens around. You won't be moving tokens around on the outside chain on the web wallet, for instance, unless we get to the point where we ultimately integrate Solana wallet capacity into our own wallet and have multiple wallets running out of the web wallet. It's potentially possible. I just don't know how much resourcing, our developers will be able to put to that. So that's the deal. Okay. As I told you, there's an awful lot of SPFs that have already been distributed to a small cadre of folks. And, those folks are sitting on them. They're mostly in cold wallets. I think most of those people do fathom what they have, and, they're probably set away for the next 5 years, and they're not even going to look at them. We'll see. I don't know. So the deal is that there's never been any real easy way for us to get these to the world, other than just giving them away. And the situation is that's kind of what we've done. So the places where we've given them away, if you bought an Examiner, you could have done one of two things. And both of them, I think, are going to turn out. I don't, have any idea when, and I don't have any, prognostication. But if you bought a 64 terabyte Examiner and paid $3,600 for it back in 21, the rebates that were delivered if you kept the unit online were ultimately going to give you some 8,000 to 10,000 SCPs. But the coin went up to $3.30 at one point. I suspect we're not at its right price right now. Maybe $3.30 isn't its right price. I don't know. But what I do know is that it's quite likely that if you held on to those tokens, you're going to turn them in for far more than what you paid for the device. That's just the way things work in the crypto cycles. So if you didn't take the SCP and you did what's called a remit, you were able to get a significant number of SPFs. And that kind of number is only going to last until we get to DEX. Once we get to DEX and start going forward, and the ability exists for these things to be sold in the wild, then that, giving away giant large swaths like that will only happen on infrequent basis, if ever again. So it was a thing, it's been a thing, it's currently a thing. So remitting was a good thing you could do. And so here's, for instance, is something you should consider. If you have skipped rebates on your Examiner and you didn't get the big, whack that everybody else got, you can still remit. You can still convert them, and you will get all of the rebates that you didn't honor your side of the agreement and keep your unit online for. And then you got some along the way if you bought licenses or if you bought Examiners. And there's currently a situation going on right now where if you buy an Examiner 64, if you buy a MT, or if you buy a license, then there are bonus SPFs included with those. The deal is that if you do come aboard as a shareholder in our corporation, there are bonus units that are applied to that as well. Now, the interesting thing is that in this initial tranche, the people that have come aboard in this latest funding round and the people that are buying licenses and EXA miners and so forth, all are guaranteed to go over in the initial tranche, which means that they get to set up as liquidity providers right away, or they get to sell tokens if that's what they choose to do. But those will go over on the initial tranche, and then any of the other prior ones will have to wait and go across on the emission schedule. And I don't know how it's going to work. It may be that the emission schedule is filled up to 100% every single month if somebody's trying to liquidate or move over, or just move over a bunch of tokens. Now, the one thing that we want to do is this. If it turns out that TVL ends up growing significantly, but the number of tokens that can go across the emission aren't, very many, right? Maybe it's a couple 100,000. The way the emission schedule will work is that it will automatically look at the numbers, and then it will increase the amount of emission that can happen that month over to the other side. That'll be automated. It won't be, for us. And we'll post that schedule, and, everybody will be able to look at the blockchain to see exactly what happened this month and last month and next month. So the whole notion here is that the ability exists to get SPFs today as bonus tokens free, but you got to essentially do something to provide utility to the project and the network. And if you do something to provide utility, then this is just a gift from us to you. And it'll be a gift that I think will be really useful. So that's pretty much it for the conversation. I think the information is out there as best as we can put it today. There's still some development work to be done on the outside. And then if all goes to plan, we expect in January to go ahead and launch the first listing. Orca or Radium look to be one of the two exchanges that we will choose, or maybe we'll choose both. I don't know. We'll look at it. But ultimately we will start. And like I said, it's probably going to be a USDC SPF thing, but it's potentially could be, something where we build a Solana pair, we build another token pair, maybe an Ethereum pair. I don't know. We'll see. But the deal is that we will likely do all this in mid to late January. And then by February, I think we will be full steam ahead in terms of having this on the outside. If all goes to plan and it looks good, there's a potential that we can do the same thing with SCPs, which would be really interesting, because if you take half the population of SCP, maybe we limit it and say, well, only 50% can go across the transporter. But if 50% then goes across the transporter, now all of a sudden there's only 50% of the coins left for contracting. And look, I don't know where I would buy, 5 million coins if I needed to buy them right now to put into contracts, because they just aren't in exchanges. They aren't there. Now, likely they would flow in, but who knows? So there would be some scarcity created there that would be weird and interesting and maybe fun, but we'd have to kind of see. So that's a thing we can talk about, and we are already thinking about it. So that's sort of the interim step. I'm guessing right now that the total amount that will end up in that initial tranche is going to end up being something like 40 million, but that 40 million will house like 15 million for an airdrop. And we will post what the airdrop's going to be. The airdrop's going to be significant, by the way. It's not going to be nothing. The airdrop's going to be major. So providing staking is going to be as much about catching that airdrop as it is collecting the monthly, daily earning yields. And I think it's going to be something that people are going to really want to do. So 15 million will go across on the airdrop, and then the rest of the 40 will be the mix of these sales, of the stakeholders, of the team, of the project, all in one big giant chunk. The SPFs that are acquired right now when you purchase a license or you purchase an EXA miner do not have to be sent to an activated unit. No, you can. We've talked about this, but you can send an email to sales@examiner.net and give us an address. And when you give us that address, it goes into a spreadsheet that we've created. And then we just automatically send them out. And then that goes into the super admin world, where we make sure that we don't duplicate the send when you do finally set that node up. So they can be sent anywhere. In the case of like our stakeholders right now, we haven't distributed those. So those are all going to be left up to a decision, right? What will happen is when we're ready to do the tranche, we will send out an email to all those people and say, well, look, this is how much you earned in the investment round. Do you want them to go across the tranche, or into the tranche, or do you want them back into your cold wallets? And they'll have to make that decision how many they want to keep and how many they want to send over and what they plan to do with them. Is there going to be A and B going forward? And the answer is probably not. At some point in the future, we're going to probably run a hard fork that will remove that declinator because it really didn't do what we thought it was going to do, right? The whole notion was that, and it probably will do it in a bull market, but does it really make sense? The whole notion is that it would, cause people to want to stand up and keep providers online. And maybe it does that after the network is much more mature. But at this point, it just has created sort of a dual sort of hierarchy that doesn't really make any sense. So tokens that go to the other side don't have that declinator, and soon on this side, or at some point in the future on this side, they won't have A or B either. They will just be SPFs. If we're going to generate any TVL, it'll probably be the USDC pair for sure. And that's the one we're going to need long term anyway on all of our tokens, because or USDT, either one of the two, because essentially you want this situation where you are repped against a dollar versus being repped against something like Bitcoin, because the storage people, want to have that stability. Until we get price discovery, though, it's kind of a moot point. You can be against anything. So what we'll really be looking at is where do we think we can get the TVL? And I think the TVL is going to be on the stablecoin. Why? Because when we sold that big giant chunk of examiners and license back in the 2021, 2022 days, about 60% of the people paid with stablecoins. Yeah, so we will need to have USDC to pair with SPF. If you want to be in the liquidity staking game, yes, you have to bring an identical amount. So the way that works is, let's say you want to be in there with $20 of each, right? So you would put $20 of USDC in, and then you would put in, at the time, what is $20 of SPF? Let's say it's 10 cents a token, so you'd have to put in, enough to get $20 worth. So the deal there is that it's always an equal amount when you start the stake. And then as time goes by, if people are buying more SPFs, then what happens is you have less SPF and more USDC, or if they're doing the other side, then it's that. And then over time, it's rebalanced. There's a calculation that gets done and your value gets rebalanced. You don't lose money, but you have this impermanent loss situation when the coin price changes significantly, because you look at how much your value is worth. And yes, it's more than it was when you first put the tokens in there. But if you had not put them in there at all, you might find that it would have been worth a lot more than that. And then you get really mad because you lost money. You didn't lose money. You lost essentially the opportunity to earn money, but you got a consistent ongoing yield. And if we do it right with the airdrop and with the yield values, it'll be far greater than what you would have sacrificed to the impermanent loss understanding. But I actually created a calculator and had James code it up for us that Takam actually has on his site, but we're going to put it on our own site because it's supposed to be there. That will actually tell you what it looks like on SPFs and the SCP earn, right? Because I think that what's going to happen is, in the first couple of months, I think there's going to be a lot of jockeying and speculation. We might see some price discovery. I don't know, but it'll do whatever it'll do. But over the longer term, right, as we get into 6, 8, 12 months, then a lot of people that will be coming in interested in buying the SPFs are going to be more about, look, I really like the storage thing, and I see that as being a lifelong deal. I really want those SCPs as they come across, and who knows, by then they may even be over there on the chain as well. But the deal is that calculator will be up online here in the next day, so you'll be able to see that. If somebody builds a calculator for the TVL yields, I'm happy to look at it. I'd like to see it, but I don't think that's something that we would do. It's likely that we are going to look at optionality to lock staking for a longer period of time, if possible. If it's potentially possible to say that you have to stake for at least 60 days or 90 days or even longer to qualify for the airdrop, we may do that. Yeah, so that kind of goes to that same question, the how long for the locks. And with that, just frankly about that, we haven't yet done enough research on that with Radium and Orca and the creation of liquidity pools, but that'll be happening over the next 10 days into the end of the year. I expect that we will be running a DevNet coin in the first week of January and really messing around with the things and understanding what we can do. So I would look for another one of these calls, probably second week of January, where we will do the finalizing and really tell you exactly how it's going to work, pricing, all of the sort of stuff, the tranche, how much is going over, how much is not. We'll have all of those sort of finalized details probably second week of January. So stay tuned on that. Look, I just want to say this, I've said it over and over again, and, we really appreciate you guys that have stuck with us from the beginning, from whenever you showed up, from whatever. This has been hard. It's been a really hard and difficult 5 years. There's just no other way to describe it. There's been a lot of challenges along the way, and some of them have resulted in really nasty things that have sort of happened. But, we've survived and thrived even in some cases. And ultimately, the thing that you have to continue to look at is, what does the product look like? It doesn't, all this other stuff is fun. It's interesting. It's helpful. It's important. It's part of it. It's, part of the underlying architecture and infrastructure. But at the end of it, the only thing that matters is the product. The product is everything, and the product is really good. For us, part and parcel of this goal of moving stuff over to this other chain is so that we can gain some funding for marketing, because we don't really have any funding right now to get our message. This is the key. When I say marketing, I'm not talking about marketing necessarily to every Tom, Dick, and Harry. That's never been our thing. I've said from the beginning that our primary customer is going to be a cloud professional, a cloud service professional, CSP, a managed service provider, MSP. These are consultants, right? These are consultative salespeople that really understand, how to run all of the various cloud applications together and make it all tie together. Those are going to be our best salespeople. So when we go to do marketing, our marketing is going to be to them, right? It's going to be a little bit to retail just because we got to get brand recognition out there. But the primary marketing is going to be, how do we onboard MSPs? Because if we onboard an MSP, that's a salesperson we just brought on board, and that person is going to go out and onboard all their customers into our network. So I really wish everybody a Merry Christmas. I don't know if that's politically correct anymore, but whatever you celebrate over the next couple of weeks, I hope you do well with it. Half our team celebrates something called Father Frost. So, I don't really care. Just enjoy it, whatever it is. And the developers, I just want to say thanks to my development team, my coders, everybody on the team. They have really just, this has been really a hard year for everybody on our project. And you have to understand, those developers have been working their stones off for you guys. And, show them some love when you get a chance, because they are doing a great job and they are building a great app, and we owe it all to them. We don't owe it to me, that's for sure. We owe it to them. So there you go. Anyway, have a good one. Thanks. And we'll see you next time.